I have been trading the forex market for more than 10 years now, and throughout these years, I have worked with a lot of trading strategies, the support and resistance, liquidity, supply and demand, trend lines, order blocks. But there is just something about the trend lines that makes it stand out from every other trading strategy that I have used throughout my entire 10 years as a trader. The trend lines flows with my perception of the market as a continual flow of price movement, perpetually moving according to the visible strength of the buyers and the sellers in the market. The trend lines guides us through the noise in the market and points us to the main direction of the market, according to the intention of the dominating power in the market. Many traders see the trend lines as a very easy trading strategy, but a lot of them are actually not making money from it. And that's because they don't understand how the trend lines really work. Yes, it's easy, but that's only if you understand the internal strategy that works with it. And that's exactly what I will be teaching you. In this video, I am going to be teaching you how to trade the trend lines the correct way, using the same strategy that I have been using for more than a decade now. This is a masterclass. But before we get into all of that, do well to like this video and subscribe to our channel. If you are encountering us for the first time, now my tribe soldiers, let's get down into this business. Before you start using the trend lines, you must first of all understand how the market truly works. The balance between the buyers and the sellers in the market depends on the active force and the overall direction of the market. And to further understand this principle, the first price action traders try to make us understand a particular concept in the market, the trend, and when you break it down, you get the uptrend and the downtrend. The uptrend and the downtrend is a classic definition of how the market truly works. Every single price movement in the market is driven by human activities, and as humans we like to follow. We want to follow what's new. We like to follow what others are doing. For example, on TikTok, when there is a new sound or video trending all over the platform, with a lot of likes and comments on the videos of creators who joined the trend, others are more likely to join the trend and participate in it, to gain similar results in their own videos too, than when nobody is using the sound or video concepts. Although, sometimes when a video is trending on TikTok, not everyone will become popular with the trending sound, and that's because some videos are more creative and engaging than others. And at this point, it does not matter if you were popular before joining the trend. What matters the most is your level of creativity in the video you post. It's the same thing in trading. When the market is going up, a lot of traders believe that the market will keep going up, so they also want to join the trend and make some money from the market. And when the market is going down, they believe that the market will keep going down continuously, so they also want to join the trend and flow with the market, looking for their own piece of the pizza before it is over. But the problem is that, unlike the likes and the comments, in trading, your money is on the line here. You are after profits, and other traders are also looking for the same profits. It's the survival of the wisest, and that's where creativity comes into play. Many traders use different types of strategies to enter the market trend in order to make profits, and like I mentioned earlier, there are lots of them. In fact, these days we have more trading strategies than profitable traders in the market, but they are all driven by short-term hype, and at the end of the day, traders realize how fancy they are, but never profitable. This is the creativity part, and remember, if you are not creative enough, your videos won't get you likes and comments, and in this case, it's your strategy. If you don't use the right strategy to join the trend, you won't get profits in the market. It's as simple as that. So now, what are the kind of trading strategies that we can use to follow the trend? Although, there are lots of them, but the best among them is the trend line. From its name alone, you will understand why we chose it as the man for the job. With only the name, you easily realize the importance and function of it on the chart. The trend lines works hand in hand with the trend. In most cases, When there is a breakout of the trend line, the market will usually change trend direction, marking the end of the former trend and the beginning of a new trend, making it a very powerful system for trading. For example, when you are on the chart and look for this, you must have probably seen it happen on the chart 1,000 times. In a situation like this, where you draw a trend line, and then, after a breakout of that strong trend from the trend line, the market changes the trend and starts moving in the opposite trend direction, marking a new empire of a trend. The trendline strategy that we are going to use works as a trendline breaker inside an already moving trend, meaning we are going to be trading trend breakouts inside an already moving trend. Now, this is how it works. Let's say, for example, we have the market moving in an uptrend. When the market is moving in an uptrend, we actually draw out our trend line. And then we look out for trend retracements that didn't move out of the trend line, then apply some other risk metrics to it. Now, here is what I mean. To get our trend line, we can draw them from the beginning of a price movement or from any 2 points of the trend movement. That one is very easy to get. And after drawing that, we begin to look out for trend retracements to the line. And this trend retracements we are looking for are not just ordinary trend retracements. We need the market to be making trend moves as it is retracing towards the trend line, making sure that the trend retracement did not break out of the major trend line. If at any case, the retracing price movements break out of the major trend line, we are not going to trade that retracement again. Now, during that retracement, remember it must be making trending moves as it retraces. So if we are in an uptrend, we expect a downtrend retracement. And if the major trend direction is moving in a downtrend, we expect an uptrend retracement. Now, after you see the retracement, you draw out a trend line on it. This is our mini trend. And when you have drawn the trend line, you wait for a breakout of that mini trend. And right after the break, you wait to see a little retracement to that mini trend. And after the retracement, you wait to see an engulfing candle appear, also without breaking out of the major trend movement. This is very simple if you follow the instructions step by step. And when you have seen an engulfing candle, then it is time to enter a trade. Alright, let me slow down and show you all. Another example of this strategy at work on the chart. Here we are in a downtrend, so we can draw out our trend line. This now becomes our major trend line, leading us in the overall direction of the market. After that, we look out for trending retracements, while the market is still respecting the trend boundary set by the trend line, making sure there is no breakout. So when you have an uptrending retracement like this one, you know that it's time to engage. So you draw your trend line below it, giving us our mini trend, and then you wait for a breakout. And when you have the breakout, you wait for a mini retracement like this one. And if you are fortunate enough to get a bearish engulfing candle, then you can initiate a trade, placing your stop loss above the engulfing candle and your take profit targets at the low of the mini trend. And as you can see on this example, our trade was a successful one. The take profit target was hit successfully. Now, let's take a look at another example. Alright, so right here, we have the market moving in an uptrend direction, and so we draw out our trend line. And as we have drawn the trend line, you already know that this is your major trend movement. So now, we have our major trend movement. The next thing is to watch how the market retraces towards the trend lines. Please note that the retracement can happen without touching the trend line, and everything will be okay. Your trade will go smooth, but it must not break out of the trend line. So here we have the market moving in a mini downtrend here. So we draw out our trend line, waiting for the breakout of the mini trend. And when it did, you can see that right here, we have a bullish engulfing candle at the retracement, giving us the green light to enter our trade. And since we have that, we can enter a trade confidently, placing our stop loss below the engulfing candle and our take profit target at the high of the mini trend. And as you can see here, our take profit target was hit successfully. A very wonderful trade we got. and many other wonderful trades you will get using this strategy. Make sure you follow it step by step. And now we have come to an end of this. Do well to share this video to your friends and family of traders. Share the good news with them and drop your thoughts in the comments section. In the next video that will appear on your screen right now, I will be teaching you on how to combine the trend lines and order blocks to create a very powerful trading strategy with almost zero loss. See you there, Tribe soldiers.